prison. Fly to see, I gon' need a medic. Obviously I fly, LV on my belly. Don't be the kind, that I'm my pocket heavy. Have money on my brain, keep talk what you're saying. Talk out with the code that I serve, not the lane. Ice on my neck that shine like a chain. Now that money, me no know what you're saying. Bitcoin hot, I'm study stocks. I want all the hood, I'm a not out the app. I'm flying like this, now I don't need a gas. I'm up on the line, anywhere up on the map.
What's up, guys? Welcome back. Malik here, and today we're going to be looking into my trades. Today was a FOMC meeting, so a Fed Open Market Committee meeting. On last night's video, if you go closer to the end, I was kind of wondering if I should trade today or not. I shouldn't have traded, so today was kind of like terrible. I probably had losses of up to about $400 on the day. And then I basically stopped because I have a daily loss of $500. So if I lost that, the account would have been totally blown. I'm at the drawdown of 449. The max drawdown is $1,000. So we're gonna actually trade a little bit more lighter and then try to just build it back up, go into the profitability again. But that's basically what happened today. I mean, I would say I just had a bias because I was just looking for a sell trade. I was just keep looking for a sell, just keep looking for a sell. When the daily was telling me like look bullish. From here it's like, all right, we kind of change the direction. We have a green close here. We have a green close on Monday. We have a green close on Tuesday. And then Wednesday we have a strong green close. And it's coming right up into this zone. And if it breaks here, we're looking, this is like breaking a previous lower high. So we would have, maybe the trend is starting to change here to more bullish. But I was just looking for sells, even to the point where I exited a good trade in just $7 profit because I was like, yeah, I'm looking for sells. Close out this trade. I wouldn't have gotten knocked out. I would have made a lot of money from that trade, but it really happened just that way. And even here, I had some trades from the night before that I had closed because I had basically reached almost like max pain. I was down 100 on this one. This one I was down only $9 and I just closed it. This one I was down $200 and I just closed it. I could have made a lot more money, but this one was a sell trade. So this is the wrong direction. If I had went the right direction, it would have went proper. This would have been a $200 trade positive, but it was a negative because I had the stop loss the other way. But let's get into all of these trades. So not using the Athens one again, we're going to actually use let's use the Qatar one again. And to look at 4 hours after market open. So let's go back to the hourly. So 4 hours after market open, and generally I shouldn't be trading before 12 midnight. Try to make my trades after 12 midnight, typically like between 7 to 9 in the mornings. I would make the trade based on what the price has done after that. But I think I was a little excited because I got the new account. So the first trade I entered for a sell. Just going into FOMC, I'm thinking everybody knows that the Fed is not going to cut rates right now. So what is the bullish momentum? But I'm guessing that the bullish momentum is that the Fed didn't cut rates and the Fed didn't raise rates. Like they basically just paused. They didn't really do anything. So that kept the market pushing up. Like they heard that, like no more rate hikes, just another pause. The previous meeting was a pause. The market just like that and basically ran up with that. So right here, I entered a sell. I was aiming for down here. You can see my take profit was 14,236. So I was aiming for down here for it to hit before it came up. It actually found some resistance here and then rallied up from there, which was kind of crazy. If you look at the hourly, I kind of draw it back here. You can see it fill this whole gap nicely, which actually creates this gap to be filled back to the downside because it wasn't like a nice trendy move like this. So I entered here 4 hours after open. I got stopped out within 2 hours for a loss of 55. So that was on the 6 hour after open candle. If I zoom this up, you'll see it. So 6 hour after open. Then this one was at 14,400.34. That's where I had my stop loss. So that one was a total loss of 55.5. Okay. The next one now was the loss of 100. So I could see that the market was kind of pushing to the upside, but where I had my stop loss, it wasn't enough to handle this little manipulation down here. And this was around 7 and 8 o'clock. So around 7 and 8 o'clock was like max pain. And this was what, 6 o'clock. So the market really came down at around 6 o'clock, hit me out 7 o'clock, 8 o'clock. It kind of pushed down before pushing higher for the entire day. That would have been a great entry. So this one I entered 6 hours after open. 6 hours after open right here. And this one was at 14,398. So this was the right direction on the day. And then I got stopped out on the 12-hour candle. So 12 here. That one was a loss of 101 at 14,348. So right there, I entered. If I had a bigger stop loss, this would have worked. But I didn't want to have crazy big stop loss, especially while I'm trading a 0.2, because a 0.2, I basically moved down 50 pips, but that ended up costing me $100 here. The next one I entered 13 hours after open. So you can see after I got stopped out there, I was a little frustrated. I entered a buy again, but then I closed it. Looks like I closed it quickly because I just didn't feel confident, but it was the right trade. That would have been the best trade on the day if I didn't close it. If I didn't close it, it would have been up $800 right now, and I took a loss of $9. And even with this, I didn't even have to risk much. I could have risked $60 and made $700 here on this trade. I entered at 14,366.27. And then I manually closed it on the same candle within around, what's that, 10 minutes, around 8 minutes. Close it on the same candle for a loss of $9.01. So you see it's pretty close to where I opened. The next one now I entered to the sell side. So this one really threw me off because I entered to the sell side where I believe the market would have went down, aim for here to get the liquidity before pushing back up. So this one was on the 14 candle, and the 14 was actually 7 a.m. on New York time. So 7 a.m. on New York time, and this one was a bigger loss. This one was a loss of $200. So that one actually stopped me out around 2 hours later for a loss of $200, 266 to be precise. So I was going to the sell side there, thinking that the market would have manipulated down before distributing, but I'm guessing this was all the manipulation we needed for such a violent move up. It was kind of weird, but today was a FOMC day, so I should not have been trading just right off the bat. So this one was the loss of 266. The next one I entered on the 15 candle now, because you know, typically when I'm right, I'm doubling down on these trades. But then I was wrong on this one, so it's like I had a double loss. And this one was a loss of 48.1. So at 14,402.94, I entered to the sell side and I got stopped out on the same 16 candle 2 seconds after the previous trade at 14,451.04 rather than 79 for a total loss of 48.1. So after that, push up, I entered to the buy side. And this one was another trade that kind of hurt me, because this one was a trade I manually closed myself, because I had the right direction. Now I'm like, okay, the market kind of manipulated already. It's going to distribute higher. But I just didn't feel very confident, especially after taking the losses from the day. I didn't want to assume a lot of risk. Having the stop loss way down here didn't really make a lot of sense to me. It was already in the middle of the day. So I just wasn't very confident going to the buy side, but this would have turned out to be a great trade for me. Just entering there, I wouldn't have gotten wicked out for 20 pips or $20. I could have risked $20 and then made upward of $200 on this trade. But I closed it out on the next candle after at 14483.40. That one was at 0.1. So the next candle up was actually a bullish candle. So I just closed it out, like just out of fear, honestly, just out of fear, because after that, the market never came back lower than this candle, right? So that's the main one that hurt me. After that, I kind of aim for the reversals. So I kind of go for the reversal because I'm saying the Fed is going to come out with something that is going to affect the market negatively. So I knew that the Fed won't be cutting rates in this meeting. I'm thinking the market is going to take the pause in as bearish or hawkish. The market actually liked that it knew that the Fed isn't going to raise rates. So I guess the market just does market things, really. So at 17 here, you can see after this big push up, I tried to catch a reversal. And similarly, I have a reversal trade right now. I'm actually trying to catch the reversal now in the market. And let's see how it works. It's not the best trade, just being that the time I'm entering. It's 11:48, so it's close to 12. So yeah, fine. But I should be entering at around 7, 8 o'clock. So let's see how that actually works out. So this one I got stopped out within 20 minutes at 14513.69 for a total loss of 54. This one actually hit my stop loss, but because of how fast it pushed up, it actually hit me out more than my stop loss, right? So my stop loss was at 14,510. It just blew through that, hit me out at 4513.69, because that's where they could actually fill the trade at, I believe. The next one I entered on the 18 candle again. So this was sell side, and it actually did show signs of being bearish. It came down for a small bit, but after coming down for that small bit, those 2-hour candles, it was just a violent push to the upside, especially after Jerome Powell came and just reiterated we're gonna stay higher for longer, so we're gonna have higher interest rates for longer. The market was like, yeah, I heard this story before. We're just gonna pile in and buy this right now. It's very weird. So that last one was a loss of 38.11. And the current one, I have a trade for, I entered at around 1473, somewhere around here. My stop loss is at 14,753, because I'm just not assuming big risk on this trade. Just to not blow the account, I'm gonna build up the account before kind of doing some more 0.2s or 0.1s again. So let's see how that trades. You can see that when I have the bad days, it tends to be a lot more trades. And today's a day when I specifically knew that I should not be trading. So let's see. We have and non-farm payroll on Friday. So let's see. These events really show me that, hey, I shouldn't be trading on these days, just because of how the price is gonna move and the volatility is just hitting you out. It's just not worth it unless you get a really good entry. Say I got a good entry from, say, 6 a.m., 7 a.m., and I was holding that trade throughout the day. Cool. But if I'm trying to trade it closer to the time, it really doesn't make sense. But I'll see you in tomorrow's video. Hope you enjoy this video. And before I forget, let's even just head to Twitter, and you can just type in FOMC to kind of see what they're talking about, like what's going on. So, breaking, the Federal Reserve has once again decided not to raise interest rates. The Fed will keep interest rates at the current level. And if you want to see like kind of where interest rates are, like a ballpark, you can actually look at the US 10-year Treasury on CNBC. It actually shows you the 10-year yield. So the 10-year yield is actually the 10-year bond. And then banks actually borrow against a 10-year bond. So they're borrowing at a 4.7% rate. So they can offer you loans higher than that. They have to offer you loans higher than that, so that way they make money on that difference. So nothing is going to be under the 10-year yield. You're not going to get an interest rate under the 10-year yield. For a credit card, for a house, for a car, it's impossible. You're going to get something here unless you have a seller financing deal. So you can see right now the 10-year yield is at 4.7. That's the lowest. So that's what the banks have access to. After that, they're going to add their 1% to that to make some money. And 1% to that is going to be 5.722%. So 5.722% is the lowest you'll get if you probably have a perfect score and some links with the bank or something, or you're doing seller financing. So let's just see what happens. Let's see how tomorrow trades. Looking at just looking at the charts, right? Just looking at the daily to kind of see where we should be looking to close. The daily is already looking bullish. Just based off of yesterday's movement, the daily should be bullish. We're actually hitting some zones here where we've had strong reversals or strong push up. I'm not really certain what to do, but I'm entering bearish from here. It's a little early, but no more trades after that until tomorrow morning. Let's just get back to discipline and slow it down. Slow it down. If tomorrow doesn't look so hot, I might go for a 0.5 or a 0.4 to kind of reduce the risk and then be able to capitalize on the move if we get that. But that's basically it for today's video. A little bit longer, but it will be out pretty soon. I'll see you in the next one. Bye bye.